82% of businesses fail in the first 5 years because of cash flow issues. We all began our businesses with the dream of living on our own terms. Part of that dream is having enough money to enjoy our desired lifestyle. You as an entrepreneur have your unique skills. Maybe it's creating content online or offering essential services. While money isn't the answer to everything, it certainly opens the door to many of life's opportunities. My journey to financial independence allowed me to earn more than I did in my day job, work less, and reach a stage where I'm happy with my life. And I was able to do this by understanding my personal and business finances. Now, I want to help other entrepreneurs like you. Through my accounting and tax firm, my mission is to help you take control of your finances so that you can achieve financial freedom. In this video, I'll share the top 3 money mistakes that new business owners often make. No accounting jargons here. Instead, I'll show you how to boost your profits and have more cash for you and your business by navigating these common pitfalls. So let's get started. Money mistake number 1. Incorporating at the wrong time. Are you self-employed and still pondering over whether to incorporate or not? You're not alone, it's a common dilemma. People often think about incorporating for 2 main reasons: legal protection and tax savings. But let me share with you a real life story to highlight the importance of timing. Meet Fabio, not his real name. In 2021, Fabio had a fantastic financial year with soaring revenues. But come tax season, he faced a staggering $120,000 tax bill as a sole proprietor. The kicker? Had he incorporated that year, he would have saved over $90,000 in taxes. And by the time he approached me, it was too late. However, rushing into incorporation isn't always wise either. I've seen clients who've incorporated too quickly and lost thousands of dollars. Take, for instance, a client who is still operating at a loss after all his expenses. He spent unnecessarily on legal and accounting fees and missed out on tax benefits he could have had as a sole proprietor. A pro tip here is if you're operating at a loss, you can actually offset these losses against other sources of income like your day job salary. And the result, a potential reduction in your tax bill or even a tax refund. So remember, making critical financial decisions like incorporation requires planning and thought. The right timing can really save you money, time, and stress. Money mistake number 2, playing catch up with your finances. Do you only summarize your income and expenses once a year for tax season? If this sounds like you, you're missing out big time. As a business owner, you juggle incoming and outgoing cash regularly. Recognizing your business's financial trends is vital. That's how you avoid the dreaded situation of bills piling up with no money in the bank. A proactive approach is to update your banks at least monthly. This habit provides you with timely insights into your business's performance and empowers you to make informed decisions before cash flow becomes a problem. Being in the dark about your finances can lead to borrowing money at sky-high interest rates for last-minute expenses, or even worse, taxes. I know of a fellow entrepreneur who had to borrow money to pay for his tax bill. Regular bookkeeping can prevent these scenarios. To put it simply, regular financial checkups can detect potential problems early on, just like a routine health checkup can catch illnesses before they become life-threatening. So to recap, why should you be on top of your bookkeeping? Well, it gives you valuable insights into your business's performance because knowledge is power. It helps you plan for your business's growth in case you want to scale, and it's mandatory for filing your taxes because nobody really wants to get on the wrong side of the taxman. And it's key to maximizing your tax deductions, and who doesn't want to save money on taxes? Money mistake number 3. Overpaying the taxman. Let's face it, tax season is unpleasant to say the least. But the reality is, taxes are something that you will have to deal with for the rest of your life. So instead of avoiding it, why not get in front of it and strategize? Being proactive with your tax planning throughout the year is invaluable. Remember, once tax season arrives, you can't go back and change past decisions. And if you end up fudging your numbers, this can be considered tax evasion. So waiting until the last minute to address your taxes can be costly. So if you are a business owner, there are many tax planning opportunities that you can take advantage of. For one, have you ever thought about hiring a family member, especially one who might be in a lower tax tax bracket. It's a smart move, but keep in mind that there are some rules that you need to follow when you are hiring family members, so make sure that you consult with someone before you set up this structure. Now, let's talk about how you take money out of your business. It might sound simple, but deciding between a salary or dividend payment can make a big difference. You don't want to end up paying more in personal taxes just because you didn't plan, right? And what about buying a car? Did you know you can buy it through your corporation or as an individual? Both ways have their pros and cons tax-wise. If you want to learn more, I do have a video that you could check out over here, which I will link, but you want to make sure that you make the optimal decision so that you are able to take the most amount of deductions. And for those of you working from home, there's good news. You could claim things like your rent, utility bills, your mortgage interest, as well as property taxes. In fact, a portion of these can be deductions on your tax return. Also, timing can be everything. If you're thinking of buying big investments for your business like computers or furniture, when you buy can actually affect the amount of deductions you could take on your tax return. Because for these bigger purchases, they are categorized as capital assets, which you need to take depreciation on, which is also called capital cost allowance in tax language. So when you make these purchases can actually have a big impact on when you could take these deductions. But remember, not every expenses are created equal. Knowing the difference between personal and business expenses can be a game changer for maximizing your tax deductions. Lastly, if you're dreaming of buying a home, there are tools out there like RRSPs and FHSAs that can help you get there sooner. And these are just a tip of the iceberg. Depending on your specific circumstances, big life events, big purchases, or even just business ups and downs, there are strategies to optimize your tax situation by structuring these big decisions in a tax efficient way. Knowing the rules and making slight adjustments can mean thousands of dollars in tax savings. And that means more money in your pocket and a faster path to building your wealth. If you are a consultant, coach, or content creator making 6 figures a year and you want to unlock tax saving opportunities, increase your profits, and build wealth, then get in touch with us. The link to contact us will be in the description box down below. And for more insights on business finances, make sure to check out my other videos listed here. Thanks so much for watching today, and I'll see you guys in my next one. Bye!